why do we have the IAS? We have the IAS to cover up the framework of accounting. That means the IAS regulates the framework of accounting. So that's why we have the IAS. So that means whatever we do here in terms of accounting applies to the same anywhere in the world. That's why we call it international accounting standard. So these are the regulatory body that puts whatever we do as an accountant or whatever we do as a business in order, so that there will be consistency in this country and that country. So whenever we are comparing businesses, whenever we are comparing accounting information, we will all understand the same thing. Remember, one of the characteristic of financial statements or financial information is what? Understandability. Remember that. And what does understandability mean? It means that accounting information or financial information was what? Understood. Do we remember that? Do we remember that? So, because it has to be understood by those users of accounting information, it is important for us to follow the set out rules. That is why we have international accounting standards. So what are the purposes of international accounting standards? Number one, it covers the presentation of financial statements. So whenever the business, the financial statements is that the items in the financial statements are your assets, liabilities, and your capital. So that comprises the financial statement. So whenever you are presenting it to the users of accounting information, it will be the way the international accounting standards have set it to be. So you have to follow the rules, the regulations made by international accounting standards whenever you are presenting the financial statement to the users of accounting information, which can be the directors of the business, which can be maybe the bank, or whoever needs that accounting information. So it has to go through the international accounting standard. You have to prepare it according to the IAS, based on the concept we read about consistency, about prudence, about going concern, about business entity, about materiality. So all these things have to be used, have to be empirical whenever we are preparing our financial statement. That is what the IAS is saying. So it covers the statement of comprehensive income and statement of financial position. So your income statement, that's your profit and loss account, your profit or loss account, it has to comply with the international accounting standard. So when you are preparing also your income statement or your profit or loss account, it has to be based on what the international accounting standards have set. For example, for the prudence, you must not think about having profit when you have not made a profit. For accrual, you must match the expenses with your income. So all these things have to be put in mind whenever we are preparing our income statement. The third one, it ensures businesses comply with accounting standards. So because we have the IAS, so whatever we want to prepare in terms of financial statement, financial position, income, comprehensive income statement, we always have it in mind that it has to go through those accounting concepts and conventions. And the fourth one, it eliminates the differences in accounting rules between countries. Because consistency is consistency everywhere, because going concern is going concern everywhere, because prudence is prudence everywhere, because accrual is accrual everywhere. So it means that whatever we are preparing here in terms of financial position or in terms of income statement, it's the same thing they are preparing in India, it's the same thing they are preparing in Raleigh, wherever in this world. Do we understand? Do we understand this? No. It eliminates the differences. What does the differences mean? Because this is Libya, we might be preparing our accounting statements differently from those in Germany. But for the fact that we all have to follow the international accounting standard, that means all financial statements, all financial income, comprehensive income records must be the same in terms of preparation. So there won't be difference. So the statement of financial position of Libya will be the same as the statement of financial position of Germany, of Turkey, of Nigeria, wherever in the world. Is it clear? So there's no difference in preparation of financial statement because we all follow what? The same international accounting standard. Is it clear?